Here's an interesting piece from the Standard. This is on April the 15th. Canadian economy will take a massive hit from CV, and oil will see the largest contraction since 1921. The great lockdown of 2020 to slow the spread of CV has pushed the world's economies into a crisis like no other. The International Monetary Fund warned Tuesday in a somber report that predicts the largest economic contraction in Canada since 1921. It is very likely the global economy in 2020 will suffer its worst recession since the Great Depression. The decade-long downturn that followed the 1929 stock market crash in the US. IMF chief economist Jita Gopinath said in a foreword to the fund's latest half-yearly forecast. She said the economic pain will easily surpass that seen during the global financial credit crunch a decade ago and could produce a cumulative loss to global gross domestic product of $9 trillion US. Gopinath said the crisis is hurting both advanced and developing countries, with rich Western economies seen contracting by an average of 6.1%. Emerging markets and developing economies are also projected to have negative growth rates of -1% in 2020, she said. The world has been put in a great lockdown. Gopinath told reporters after release of the forecast this is a crisis like no other. The 189-nation IMF is projecting the global economy overall will shrink by 3% in 2020 rather than expand by 3.3% as it predicted at the start of the year. That would be a much more serious contraction than the 0.1% squeeze seen in 2009, the worst year of the previous recession. In Canada, where the Parliamentary Budget Office last week said the 2021 federal deficit would balloon to $184 billion Canadian, or 8.5% of GDP, the IMF predicts the economy will shrink by 6.2% in 2020 and then rebound to 4.2% growth in 2021. That's assuming that the outbreak fades in the second half of the year and containment efforts can be gradually unwound. The fund sees economic contraction this year of 5.9% in the US, 7.5% in the 19 European countries that share the euro currency, 5.2% in Japan, and 6.5% in the United Kingdom. China, where the outbreak originated, is expected to post 1.2% growth in 2020 versus 6.1% in 2019, after the world's second biggest economy began to open up well before other countries. The IMF sees global growth surging to 5.8% in 2021 compared with 2.9% in 2019, as economies bounce back from a lowered baseline. Canada's economy has faced a double hit from both CV and collapsing oil prices, economists note. More than 2 million Canadians, or 1 in 10 workers, have made jobless claims since the start of the nationwide lockdowns in March. A 6.2% decline in GDP for Canada would be significantly bigger than the just over 1% contraction the IMF forecast for the country after the 2008 financial crisis, and would mark the biggest annual fall since 1921. Senior Canadian bank economists, however, caution that economic forecasts vary widely and say the IMF's numbers should not be treated as the only correct prediction. Okay, so here we throw a little bit of doubt into there, huh? People frankly are all over the map, said BMO Chief Economist Doug Porter. I would say that while these are reasonable estimates, they're more towards the negative range, but it doesn't mean they're wrong. BMO had previously forecast a smaller 4 to 5% decline for Canada's GDP this year. Economists said that there could be a very modest recovery in the latter half of this year with a strong rebound next year, though that too will depend on whether there's a subsequent wave of the outbreak. It would also likely take longer than a year for the unemployment rate to again reach pre-CV levels. Real growth is really going to be a 2021 story, said Dawn Desjardins, Vice President and Deputy Chief Economist at the Royal Bank of Canada. Areas such as travel and entertainment, which have been particularly hard hit by lockdowns and travel restrictions, will most likely not see as quick a rebound as other sectors. A V-shaped recovery is likely still possible for some sectors, Porter said, notably retail. I think we'll see transformation on that front, Porter said. Some bricks and mortar stores might not reopen, but others will strengthen online presence. I think retail will come back relatively quickly. Compared to Canada, the IMF is forecasting a less steep drop in GDP for the United States this year. Economists said the difference between the two is less about which country has implemented tougher lockdowns and more about the impact of the price of oil. The energy sector is a smaller part of their economy than Canada's, said CIBC chief economist Avery Shenfield. He also said while the 4.2% increase the IMF is predicting for Canada's GDP next year may look strong, it really isn't when compared with the big drop forecasted for this year. The message from the IMF is that we're not getting out of this fully in 2021, Shenfield said. And that is absolutely right. It's interesting that the IMF is predicting this, but I heard of predictions in the US of unemployment rates in the second quarter of 40 to 50%. And the drop in oil has just been earth-shattering. This means when you have a drop in oil production and a drop in oil price like this, what this means is that there is zero manufacturing, zero production, there is zero economic activity taking place, or nominal economic activity taking place throughout the world. I think it'll be a little bit longer than 2021. Just the amount of money the government has borrowed is absolutely insane. Anyway, if you've enjoyed this video, please like, comment and subscribe below. And in the meantime, this is Hound Dog Steve signing off, wishing you a very pleasant evening. You take care now. See ya. Bye.